Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Monday, March 2nd. Hey, we do got, at the end here, we got a little tip on for people who with reverse mortgages looking to buy here, so stay tuned. But first, we do got a lot of economic news releases scheduled for today. We'll start with the personal income for the month of January. So back in December, we saw a 0.3% increase in personal income, and the forecast was supposed to jump up slightly to 0.4, and only jumped up to 0.3%. So not quite as what the expectations were. On the other hand, we got consumer spending for the month of January. So back in December, people pulled back. We're saving more than 0.3%. And forecast for January was at negative 0.1 and actually pulled back to 0.2%. So people are actually saving a little bit more of their money rather than spending it. We got the core inflation for the month of January. So this is basically when you strip out food and energy. You get the core inflation. These are the numbers that the Fed will look at. So we had zero basically in the month of December, and an increase forecast was at 0.1. It came in expectations at 0.1%, so came up a little bit higher. So this will help us edge up a little closer to that 2% goal that the Fed wants, is that even though we're still little ways from it. We got the market PMI. This is a nice manufacturing number here. We had a 53 or 54.3. Anything above 50 is considered expansion, and we see continued expansion. So modestly, but it went up to 55.1 in the month of February. More manufacturing numbers. We got the ISM numbers for the month of February. So we had a 53.5 back in January. It was supposed to taper down to 52.8, and it did decline a little bit, pull back a little bit, even though it's still in the expansion. But so these are numbers we'll have to kind of keep an eye on at 52.9. We also got construction spending month of January, so we had a 0.4% increase in construction spending in December. Forecast, for January was at 0.3, and it pulled back quite a bit. We had contraction at negative 1.1%. So mixed bag of news here. Obviously, personal income we see that was up a little bit because consumer spending is down. Core inflation still at very modest here. Market PMI slightly better. ISM pulled back, and construction spending pulled back. But the stock market's currently up a bit, which is I think it's just they're kind of in a good mood today. So there's really no reason for them to really be up when you look at those numbers to get too excited, unless they're just bad news is good news. Probably because they're looking at a lot of these reports that when it comes down to it is when the Fed's going to raise rates. So that's probably what they're looking at, and maybe they're a little happy that these numbers aren't as good, so maybe it'll push the Fed a little further along when they do decide to start raising rates again. On another note, China did some cuts on their interest rates today. They're concerned about they're seeing some deflationary numbers in there, so they wanted to try and create a little more inflation in their economy. So they did about a quarter cut on their key rates there. Fannie Mae our bond market pulled back about 9 basis points, so this basically gives us pricing for the worst. So which that means that pricing worsened enough where rates worsened slightly from Friday's pricing here. All right, so to get onward to our news about some tips on reverse mortgages, if you may or may not know this, but the HECM reverse mortgages go up to a value of $625,000. So with that in mind, let's say if a couple, some of the news reports are coming out that, or studies have been showing that a lot of the baby boomers are retiring. When they sell their home, they're not necessarily buying downsizing. A lot of them are actually, almost half of them are actually going upwards. They're increasing or getting bigger homes. So with that in mind, let's say, for example, you got somebody who has sold their home. They made $200,000 on their home. They have $200,000 for down payment for the next home. They could potentially look at, the rule of thumb is look at double that. So let's say if they want to use the full $200,000, they could easily qualify for approximately $400,000 with a reverse mortgage. So it's something to kind of think about if you want to use a general rule of thumb in terms of qualifying for reverse mortgages, looking for that next property for those people who have that. So as long as the value is up to $625,500, you could look based on like double what they have to put down. All right, folks. Hopefully that helps you out. Hope you guys have a wonderful day. Thanks so much for watching. We'll catch you guys tomorrow. Tomorrow won't be as many data as today, but we'll have a few. See you tomorrow. Thanks again.